Okay, the next thing we need to look at is how the tax base itself has shifted over time. So, for instance, in California, with Prop 13, we know that the rapid increase in property values that was disproportionate to the rest of the country caused a rethinking of how we're going to collect taxes. Another thing that has required rethinking and has been rethought in much of the country, but not in California, is the changing nature of the economy. So the state sales taxes, the states began levying sales taxes in 1930s, and it was called the tax on personal property. And the sales tax was, you would if you bought some clothes, you would put a tax on those clothes. And there were certain categories of products that were exempted. For instance, groceries are exempted, and but the you wouldn't tax, when you go to an attorney, you wouldn't pay $1,000 plus another 5% tax. So you would pay $1,050 and 50 of it going to the state. When you had a plumber come in and do plumbing in your home, you would pay a tax on any of the like pipes and fixtures that they would, you pay a tax on the toilet, but not on the cost of installing the toilet, that kind of thing. And over time, states began to realize that as the economy was shifting, their taxes weren't keeping up with it. And so this is a chart that shows what has happened in terms of the overall share of the economy. So the red share are really things that you can tax, that under a property sales tax, wholesale and retail, manufacturing, transportation, agriculture. We can taxes on all of those under the 1930s sales tax um, provisions. However, what we see is that the share of these things that we can tax on as a percentage of the total economy has shifted, and services are now the dominant kind of force in our economy. In fact, about 80% of people in the United States are employed in a non-taxable industry under California law. And so many states considered taxing services, and they extend the sales tax to services in most states, but the type of services they tax vary from state to state. And so there were basically six categories of services that could be taxed. Services to personal property. For instance, if you get your car repaired, that's a service to personal property. And in some states, they tax that. Services to real property, landscaping, janitorial services, etc. Business services, this is credit reporting, answering services, things like that. Personal services are when you get your hair cut or your dog groomed, or any of those kind of services on you personally, your body. Professional services like attorneys, physicians, accountants, and then amusement and entertainment. So some states put taxes on your movie tickets or your sporting event that you go to. However, there's something of an uneven application even with these, with the sales tax as the country becomes more interdependent. And so this kind of first reared its head when we moved to a lot of e-commerce. And initially, the federal government put in a blanket exemption on sales taxes from products delivered bought online, and this put physical retail locations at a disadvantage compared to internet. So not only could you go online and compare prices across a bunch of different stores fairly easily, where if you go to Walmart and then you go to Kmart, you have to like actually drive between them to figure out the differences. So not only were prices generally lower on the internet, but they also, with this exemption of sales taxes, gave them an additional advantage. Eventually, the federal law went away, and states started taxing internet products bought in their jurisdiction. But this is kind of, as the country gets more interconnected, the kind of the way we tax things has gotten more complicated. But when it comes to service taxes, it's also very complicated. And in some states, graphic design produced in the state is taxed. So if you are a business and you contract with a graphic designer, if that graphic designer charges you $1,000 for a website, for instance, and there's a 5% tax on that website. Um, who does the $50 go to? Is it taxed at the consumption level, meaning the people who buy it are the ones that matter, or is it taxed at the production levels where that graphic designer is actually located? So you can get a situation where in one state the consumption, you're being taxed on consumption, in another state you're being taxed in production. So this same a service is taxed in both states for the same amount of money. In other places, you can have the graphic designer being required to pay taxes. So if a graphic designer in California sells a website to a company in New Mexico, technically they have to pay New Mexico the sales tax on that. And as you can imagine, this is a nightmare for individual businesses to comply with the rules, but it's also a nightmare for the states to enforce. And so even in states where there are service taxes, not everything gets captured. Taxes on goods are much, much easier to capture. This is a map that shows kind of where various taxes are being implemented. So you see here in New Mexico, all 6 types of taxes are put in place. Or in places like California, Oregon, I think that's Michigan, Illinois, there are no taxes on any of the services. And so we go from a tax in Wyoming on just amusement. Your movie tickets are taxed, but your lawyer isn't, your hairdresser isn't, things like that. To several states, I think there's 2 or 3 states where all 6 areas are taxed. So we just have a really uneven service tax distribution. In 2019, Senator Bob Hertzberg introduced SB 522, which would have created sales taxes on services in California. And it was seen as largely a progressive tax because wealthier people tend to spend a greater percentage of their income on service-based expenditures, whereas less well-off people buy more physical goods as a percentage of their total budget. So the sales tax on the traditional sales tax that we have here in California kind of is regressive in that a bigger portion of poor people's budgets go to the kinds of things that are taxed by the sales tax. And so the service tax was seen as more progressive because there are things that wealthier people use. And given that this is a fairly progressive state, Hertzberg did not anticipate the backlash that would come with this. And it faced immense pushback from conservatives and business interests, but also from just general people. And the reason for this is that people really felt like Sacramento has an insatiable budget demands and that no amount of money we ever give them in taxes will ever satisfy them. So the reaction to the service tax was both a reaction to, an increase in the shifting nature of the tax base, from people vested in those services, but also a reaction among citizens that we are just taxed too much.